Prashant, this is Punita. I wanted to ask you two questions actually. One, do you see this budget change the allocation that you would make in your portfolio to various sectors? And the second is, do you think this is going to bring in, I know this is definitely good for foreign investors, how do you see it impacting local retail investors?
I think I don't think it impacts local retail investors too much, except to the extent of option of investing in tax-free bonds. But for equities, I don't think it changes much. I think this is a very pro-investment budget, and I would like to read the economic survey, the railway budget, and this budget all together. I think this budget is trying to reduce subsidies by improving the efficiency, by reducing leakages. It is managing to increase allocation towards investments meaningfully, even though there are fiscal challenges. And I feel it is, I mean, things are also being done to promote new projects. If you look at the 5 UMPPs that he has promised, the bankruptcy law that is being planned, I think the capex cycle in India should, in my opinion, revive quite strongly in the current year. There are quite a few indications. If you look at the order pipeline in the road sector, in the power T&D space specifically. So I think the capex side of the economy should recover faster than the consumption side.
Sunil, so let me just pick up a word from Prashant's answer. For the longest time, India has been a consumption-driven economy. Autos, FMCG, consumer names have done well. Do you think now the market behavior will change, assuming that the government thrust is also changing? They're trying to change the architecture of the country?
See, very clearly, I think the good thing about India is that we are very diversified, so we are not dependent on commodities and so on and so forth. You are right that last 4-5 years, because the capex cycle was not as robust, the interest shifted to more consumption or export-oriented sectors like pharma or IT or even the consumer staples and discretionaries. Having said that, you are right that there will definitely be now opportunities also on the capex side or on the the economy building sectors. And to that extent, yes, we will have many more choices. But to some extent, Nikunj, last 8-9 months, it was already being built in. We already were cognizant of the fact that the push is going to be in, building the economy and building the infrastructure. And to some extent, the prices of some of these stocks are already discounting that. So I think let us see how this spending pans out. I agree with Prashant's earlier statement of this National Investment Fund and how it can cause a multiplier effect, and also the fact that tax-free bonds are good because that money ultimately would wean away from other non-productive assets like real estate and gold into productive assets which could be used to build the economy. So I think overall you are right that there would be definitely interest in the capital goods, but you have to be cognizant of the valuations.
Shankar, for a stock market investor, it is all about making money. So based on today's budget tone, do you think the market behavior could change? You've been a long votary of buying into autos and consumption names. Will things change now progressively according to you, Shankar?
I will still hold my horses and going out and buying infrastructure if that was your question, because your voice broke in the middle. I still continue to believe that India is ultimately not so much of a capex country as it is a consumption economy. And if you go around to any fair or a food fair or to any place, I've been doing that for a few months now in India, and simply the consumption part of the economy is still, in my view, has a long way to go. So I'm a believer in India's consumption story. On the infrastructure side, I've been negative for a long time, but I see value there. So it's not to say that there is nothing there, but it's still early days to say whether that is a sector where we are going to make 300-500% going forward. So I still believe consumption is a good space to be in, and I would hesitate to be a big brave buyer of the infrastructure space just yet.
Shankar Sharma, hold your thoughts there. And talking about infrastructure, we do have Mr. Vinayak Chatterjee here in the studios with us. But I'll take a quick question to Mr. Parthasarathi Shom. He's been waiting by for a while, and let him go after that, sir. Mr. Chidambaram turned to you as far as the tax regime was concerned, which was amok. Do you believe Mr. Jaitley has walked the talk on ending tax terror when he brings about this Dispute Resolution Act, which will allow India, the sovereign, to settle taxes with companies themselves?
Well, he has touched on dispute, and in the Tax Administration Reform Commission, we have a huge chapter on how to really reduce the disputes and how to manage them and how to get the stock down and so on. He has already started, the current Finance Minister has already started in looking at the stock of disputes and how to reduce it. So I think he is going in the right direction. It is a very, very nice thing to see, and at the same time he has said that the whole TARC recommendations are under very close and examination and in the final stages. So I would wait for some time to see what they are going to come out with. But even Mr. Chidambaram had looked at the dispute problem and had mentioned that as a major issue, and the new finance minister, the current finance minister, said that that is the main issue that he thinks we have to really handle, and he is doing it. I mean, he's given every direction, every sort of sign that he's very serious about it. So it's a good thing to see the way he's going.
Dr. Shom, thank you so much for taking the time out and joining us with that clarity on as far as the tax proposals are concerned. But we did touch upon infrastructure. Vinayak Chatterjee with us. We spoke before the budget as well. Mr. Chatterjee, are you happy with what you've seen as far as the infrastructure thrust is concerned? Plenty of proposals in the infrastructure sector. One that interests us is the plug-and-play one, increased allocation. What excites you the most?
Actually, a slew of measures announced should certainly excite the infrastructure sector. We see it as an extremely positive budget for us. And let me outline for you what we quickly listed down as what I would like to present to you as our observations of the seven boosters for the infrastructure sector. First is a very clear recognition of the role of public expenditure in infrastructure projects as the vehicle to kickstart the growth cycle. I think we've discussed that before the budget, and we see that significantly re-emphasized by the FM, including his statement that whatever fiscal space I have left, I will put that into infrastructure projects. I think that's a very significant statement. That's point number one. Point number two is something just before the budget we were discussing, that we've been advocating creation of off-budget vehicles to garner funds from different sources, and he has announced the creation of a national infrastructure and investment fund with an initial seed capital of 20,000 crores from the Consolidated Fund of India. We would say thank you and well done. Point number three, tax-free bonds to garner once again resources outside the Consolidated Fund of India for roads, rail and irrigation. Very good step. Point number four, PPP revisited. A complete relook at the structure by which we can re-invite and re-energize and re-motivate private sector to come in. What has he said? We are going to rebalance PPP formats and within courts with a far higher share of risks that private sector should not be bearing allocated to the sovereign. Excellent point, and we look forward to the restructuring of PPP formats. 5, corporatization of the 12 major ports owned by the government. From this archaic trust structure where nothing moves to corporatization and all the benefits that come downstream from there. An excellent step, long overdue, good step. Point number 6, you yourself mentioned this, and he mentioned this in the context of the 5 UMPPs, which itself is a very major boost to the power sector for generation, as well as to electrical goods manufacturers and to the infrastructure generally. But the more important point was the one you mentioned, which is plug and play. Finally, after 10 years of speaking to the government, from PMO to Planning Commission, we have finally got the point across to the Government of India that projects should be awarded transparently only if all permissions are in place before that, which is something that the FM said is now going to be the norm. And the last point, this whole structure of independent regulators in the different infrastructure sectors that are popularly believed to have not delivered. We are soon going to get a regulatory reform law that cuts across all the, shall we say, negatives of independent regulation and hopefully create a level playing field for both public and private investment. So to conclude, I think we really couldn't have expected more from one budget. Thank you.
Okay, I'm going to go back to Shankar, and Shankar, I'm going to change the scope of the complexion completely and talk about how a foreigner would view this budget, because they are the ultimate price creators of Indian stock markets. Do you think for a foreign investor who's invested in India or is planning to invest in India, this budget is a delight? A tax regime which is coming down, clarity on GST, and you know, clear commitment to a capex cycle.
Yeah, and also don't forget that, you know, they can place people here and not get, you know, notice, you know, from their, you know, from the tax departments because of the amendment of the permanent establishment norms. Not that fund managers, you know, are staying in Singapore and Hong Kong only because of tax. I think it's because of better quality of life, but that's a different matter. You know, I think this is a positive budget for practically anybody looking at India as an investment destination, be it FDI or be it FII. So I'm optimistic that, you know, you're going to see, it's an already optimistic situation for India as far as foreigners are concerned. The negative could have been if the FM had done something to disturb that optimism. The good thing is that he has done nothing to disturb that. In fact, he has, if anything, furthered that. So I mean, I'm absolutely satisfied with whatever has been put out. There is no scope to quibble for anything here.
Shankar, if I may ask you a question, do you think there's anything that you were expecting in the budget that hasn't come through? And second, does this change your view now on how Indian government is not pro-poor? I mean, I'm just curious to know what you think about that.
No, I don't think this government is really pro-poor. So that I'm very clear about, and this budget did start off talking a lot about that. But you know, but we'll that is not something that just the budget itself can prove or disprove. You know, but my view is that it was only a positive surprise as far as I'm concerned, and that was the corporate tax cut. And you know, I wasn't expecting that, although you know, I had said this privately to many people. You know, that is the one thing that can signal serious intent, and that has come through. So if, I mean, really, I mean, I'm saying that we can always nitpick, but you know, my view is that this is a very, very positive budget for me. You know, because it confirms what I believe in, that low tax regimes ultimately spur big investment dollars. I mean, that has been seen across the world, and I think that's exactly what we are going to see here as well.
Okay. All right, Shankar, appreciate your time and glad you could join us. If I just mark the markets right now, heck of volatility, lot of volatility. There you go, markets going up and down. But please don't look at today's movement. It's all, you know, some amount of price appreciation, because yesterday we did see a monster rally. Ramdev, you have a follow-up question for Prashant. So would you like to go ahead and ask your question to Prashant?
Prashant, you know, I was just wondering what would be the reaction of the governor in RBI, because the next move, I mean, we were expecting that more aggressive rate cuts should follow the, I mean, they would have looked at the fiscal situation here. Now, instead of 3.6, it is 3.9, and whatever budgetary proposals are. Do you think now the governor would, you know, stay the course, and they would have the unofficial consent of the governor to 3.9, and we'll see an aggressive cut going forward?
I think the key to, I mean, yes, the fiscal deficit number is slightly, I think, higher than what probably market was expecting, what markets would have loved. But I think there was a need to spur public investments to revive the economy, and that is what has been done. I think fiscal deficit is one of the important considerations for interest rates, but I think the overriding parameter there is the inflation. And I think the RBI has been very transparent. They have repeatedly said that they would like to maintain real interest rate. So I think going forward, inflation is the key. And right now the credit uptake is very weak. So I don't think there is any crowding out of investments likely, at least next year. So to that extent, I think despite this slightly higher than expected fiscal deficit, I think interest rate should continue to move lower. But in the very short run, it is possible that markets may react a bit.
All right, we have an exclusive word coming in from Rajiv Maharishi, India's Finance Secretary and also the Secretary in the Department of Economic Affairs, somebody who's been at the pivot of budget making. Ruchi Bhatia caught up exclusively with Finance Secretary Rajiv Maharishi.
So thank you so much for joining us on ET. Now, my first question to you, the government has gone ahead and has reassessed the fiscal targets for the next couple of years. What is the rationale behind it?
Well, you heard the FM speech. This is an extraordinary year because of the extra devolution to the states, 42%. So with this extra devolution, the fiscal space for the center actually reduced by, almost about 2 lakh crores, 1.8 lakh crores. So obviously, meeting a target of 3.6 would have been unrealistic. Without sort of squeezing expenditures, which was not a good idea either, because you need investment to kickstart investment in the private sector too.
Also, sir, do you think the ratings agency will worry from the fact that the government has extended the fiscal deficit deadline to achieve 3% by 1 more year? Is that a cause of worry for the ratings agencies?
Well, I don't know. Rating agencies can get worried if they like, but I would say that this is overall a sign of a good fiscal position, that in spite of a restrained space of 1.8 lakh crores, we have still come down. We are on the same path. We have not deviated from the path. Instead of 2 years, it will take 3 years. But if you see, the path is also progressive. It's reducing by 0.2% this year, 0.4% next year, and 0.5% the third year. It's a progressive path also. But for the extra devolution, perhaps this might have been a different story altogether.
Also, the government has said that they will expect CPI inflation at around 5%. Much of the comfort is coming from crude. Do you think this cycle could be? Do you think this cycle going forward is in some sort of a worry, simply because crude is a cyclical commodity. Once the prices go back up again, this inflation target could be in somewhat of a jeopardy?
No, there could be a geopolitical situation where the oil prices reverse. That's possible. It's also possible that Fed puts up its interest rate, and that can also have an impact here. But on the whole, that's the downside. The upside is that is that you can actually have better growth than anticipated, and therefore more tax buoyancy. So I don't think that should look only at the threats. Of course, they're there. They're very much there. We should also look at the opportunity and the positives of it.
Right. The government has said that they expect double-digit expansion in growth very soon. What will be the key factors responsible behind it?
Well, the answer to that, of course, is you have to have more, productive investment. So you have to strengthen infrastructure. You have to have surpluses for investment. And I think the step that the finance minister has taken today to announce the extra exemption only for under CCD, which is...
Oh, that was a big ET now exclusive. I want to go back to the Nifty, and as a hell lot of volatility has kicked in, let me remind our viewers that ITC is down 8%, which is a big baggage on the Nifty. And then today is Saturday, so foreign institutional investors are enjoying a long weekend, so foreign buying already has not kicked in. Sunil Singhania, I know you'll hate to answer this question, but my question to you is that if everybody's gung-ho about market, why are markets so volatile, and why is Nifty down 75 points? This is a great budget, 10 on 10, but Nifty is still down.
See, I think, if you are looking at one day, markets going up and down, obviously you will definitely have some volatility. Having said that, I think the volatility on this budget is probably much lower than what we have seen earlier. 1% up and down is not too much of a volatility. Obviously, some stocks have got hit more and some stocks have benefited. But Nikunj, I think what we have to also see is the intent of the budget. One is it's a budget which is clearly giving direction from a 4-5 year perspective, whether it's taxation, whether it is retrospective taxation, whether it is contagious issues like GAR or forward-looking legislations like GST. It is also trying to, pinpoint issues which have been facing the Indian economy for a lot of time. So gold monetization, I think it's a big step. Or the focus on compliance and the focus on ensuring that black money reduces. I think all these things will have a big impact which you can't quantify now because they are being done for the first time. So I think yes, today there will be volatility, people will go in the fine prints, Coming Monday, there might be something which concern the investors, something which might buoy them. It's a thing which we have been seeing for the last 15, 20 years, so it's no different. Maybe for the first-time investors, this looks to be like a roller coaster, but for seasoned investors and for long-term investors, I think this is just another day. So don't get too excited or worried about this volatility. I think the economy is heading towards a period of sustained growth. The government is doing everything. And the main thing is that they are very cognizant of the facts which of the things which are impacting the economy, and they are working exactly there. So we are very positive from a direction perspective. I don't know what is going to happen today or tomorrow, but equity investors can expect good days for the next 3, 4, 5 years.
Right. Prashant, broadly speaking, if you have to look at the other softer issues, which is land, labor, interest rates, they're outside the preview of the budget. So do you think from a market perspective, it's time to move on? Budget is constructive, it will aid to earnings, but look at other big issues which are more important now?
I think Sunil put it very nicely, and I think I don't have too much to add, but I think the key issues, the diagnosis part of the key issues, the solutions and the execution, I think are very good, very smart to my mind. I mean, if you look at some things like Jan Dhan program, what does it imply? It implies quite a few things. It can increase financial savings, reduce leakages in subsidies, and therefore help fiscal deficits over time. I think this budget does quite a few things. We are moving in the right direction. I think capex cycle, we should see a meaningful revival in the current year, and over the next 3-4 years the tax rates will moderate. You cannot eliminate that's a significant positive over the next 3-4 years. So I am quite optimistic about the economy and about markets in general over the medium term.
All right, Prashant Jain, Sunil Singhania, two of the finest fund managers of the country, explaining the budget and its implications on the market exclusively on ET Now the last hour or so. Thanks so much for sparing the time and doing this interview. But let's now talk about the macros, because now we've got a panel of the sharpest economists. Swami Dr. Subir Gokarn joins in as well. In minutes from now, Arvind Panagrija, Vice Chairman of the Niti Aayog, will also be joining us live and exclusive. Dr. Gokarn, to you first. How are you reading the budget proposals on the macro picture? Are you okay with the fact that the government has not erred on the side of caution as far as the fiscal deficit is concerned, and we're going to be seeing some amount of fiscal slippage? Is that okay with you?
Well, I would have liked to see the trajectory maintained. But having chosen not to with the 3.9 as opposed to 3.6, I'm a little reassured by the commitment, and it remains that at this point, that the slippage will be entirely dedicated to infrastructure. Overall, I think the emphasis on infrastructure, particularly the setting up of the National Infrastructure Fund, I think that was the way to bridge the gap between fiscal discipline and the need to commit public resource to infrastructure. Operationalization, we'll have to wait and see how that plays out. But I think using this as a platform to start to leverage is the way to go. The initiatives that have been taken earlier, IIFCL and so on, have been at a much smaller scale. So this is a way to ramp up. So let's wait and see how this gets translated into action. But to me, this is the big and most significant, component of the dimension of the budget, getting infrastructure, public money into infrastructure without compromising too much on the fiscal side.
Maitri, you maintained all along that is perhaps a very pragmatic approach as far as fiscal management is concerned. Are you relieved that he's done that? He's delayed it by 2 years, but he's willing to stick to the target 3%.
Certainly good that he's taken a more pragmatic view of the fiscal deficit. But my worry really is that the money that you get, the extra space that he gets, as he calls it, is not going to be used for productive investment. Because if you look at the plan expenditure, it is surprisingly less. It is less than what we had as per the revised estimates of 13-14. So contrary to what he has said, there is whatever little fiscal space is not going to go to investment. So that really is my fear. Any budget must balance growth and equity. My worry in the case of today's budget is that it is still a little bit more in favor of growth, in the hope that growth will bring equity. Now, for a country which has so many people below poverty line, both in absolute numbers and even as a percentage, is that enough in a budget? I'm not so sure. That is my worry, because ultimately if it comes to equity and comes to redistribution, it has to come from government spending. Government spending in planned expenditure is sharply down. It is less than what it was as per revised estimates of 13-14. And that is a huge
Swami, that's
statement
inexplicable. You know, the cut in planned expenditure, government spending in planned expenditure, that's inexplicable, because one would have thought that they've allowed for fiscal slippage to go in for more planned expenditure. And also the point that Maitli made on the balance between growth and equity, how do you see it?
No, look, part of it may simply be that they're shifting the investment to the states rather than the center. And we don't have that total picture, and there's no longer a planning commission, and there's no longer an annual plan which leaves something higher. I'd simply say this, it's an interesting question. Why are the markets down? Despite everybody saying it's such good news. And I think the answer is the market would first say, look, what's new? For 9 months, the government has been trying to kickstart the economy and nothing has happened. So you give one more kick. Does it mean that the horse will start? Where was the problem? Was the problem simply something in the budget? Or was it in the problem on land acquisition, environment, forest, lack of state government clearances, court activism? I mean, if those are the bottlenecks, then what he has done in the budget surely by itself cannot be enough. Secondly, the question of the quality of the fiscal deficit. The revenue deficit remains 2.8%.
That's right.
So this is not a high quality fiscal deficit entirely going towards kickstarting the economy. It's not. It's a poor quality fiscal deficit. You put those two together and then say, Jaitley has given one more kick, but all the other ministers have been giving a kick, and this horse, has it really got going? Because frankly, if you're not going to get 8.5% growth, if you're going to have revenue-less growth and profitless growth, you're in trouble.
Swami, I'm going to just interrupt you for a minute, and Puneeta, I'm going to come back to you in just a moment from now. We've got a very, very special guest joining us to explain the credibility of these numbers, and I will hand it over to our consulting counsel, Maithili Visnurmat, to continue interrogating and questioning Arvind Panagaria.
Arvind, thank you so much for joining me now. My first question to you is, are you happy that the government has taken your advice of taking a slightly more relaxed view of fiscal deficit, or are you worried that the ratio of the revenue deficit to the fiscal deficit is still close to 72%, and that's not a very happy augury at all? So how do you view it? Happy that the fiscal deficit has been relaxed, or I'm happy that the ratio, the quality of the fiscal deficit has not become any better at all?
Marsha, I mean, the fiscal deficit was for 15-16 initially pegged at 3.6. The finance minister has gone to 3.9. It's not a huge jump, but it is something that I would welcome actually, because it then gives him the space to raise the infrastructure spending while also dealing with the much larger devolution to the states. So I'm generally very happy with the budget, the way the finance minister has handled it. I've lost them.
As far as the revenue deficit is concerned, the improvement in the quality of the fiscal deficit, are you a little distressed? Would you like to have seen faster movement on that front?
No, I'm not disturbed. I think, maybe you focus a lot more on the revenue deficit, but, it's 2.8. It's not out of line in any way, and this focus that you have single minded on the deficit, unless it's hitting the roof, I don't quite sort of understand actually, because at the end of the day, no ratings agency just goes by that single number. All ratings agencies I have talked to, from the top to the bottom, they all actually say that they look at the overall set of actions that budgets take. So on that front, on that metric, the budget actually comes out smelling like a rose.
Oh, well, absolutely. I agree. Rating agencies don't look at just one number. But the point is, the finance minister said that whatever extra fiscal space he gets, he's going to use it for productive investment. But if you look at the plan expenditure numbers, they are less than what it was as per the revised estimate of 13-14. So contrary to what the finance minister says, he's actually going to spend less on productive investment. So is that why perhaps markets in particular are not too enthused? Of course, I agree markets are not the right indicator to go by, but the fact is that the government is going to spend less on productive investment, contrary to what the FMS said.
I mean, I do not know what number are you looking at, but if I look at the infrastructure, which is really the most important part of the productive investment, that has risen by 70,000 crores. that really is the key expenditure that the government needed to push up, and it has done that.
Absolutely, Arvind. The government has put aside some money for investment, that's true. But shifting now, once again, if I can look to the tax side, gross tax revenues, and I'm talking of gross before devolution, is expected to go up by less than 7%, as against 18% last year. Now, we're talking on an economy which is recovering. Why should gross tax revenues grow by only 7%? Is that not too low a number, given our low tax to GDP ratio as it is?
Okay, I mean, that you need to look at. I haven't looked, I watched the budget speech, and then I was on the television show, so I haven't had the opportunity to look at all the specific numbers. So I'm afraid I can't quite comment on any of the specific numbers.
If I can shift now to something that involves the Reserve Bank of India, the government has taken a very good move. They're saying that they have agreed with the RBI to have a monetary policy framework, but they seem to have settled on 6% as the inflation target, as against what the RBI had wanted of 4% plus minus 2. That is my first question. The second is that equity flows, now the control over equity flows has shifted to government away from Reserve Bank of India. Now this is something that the Reserve Bank had strongly objected to, saying that it limits their capacity to do anything about exchange rates. Now does this again change the equation between the government and the Reserve Bank of India, and will it become a cause for fresh friction?
No, look, I mean, first of all, your inflation 6%, you're talking to the wrong person. I am not an inflation hawk. So I'm perfectly okay with 6%. There is absolutely zero evidence showing that, if you go below 6%, it leads to better growth or any other better outcomes. So personally, I don't see anything wrong with, ultimately, of course, it will still be the call of the Reserve Bank of India. That's something, monetary policy is something that the Reserve Bank of India does control. But if you're talking specifically about the inflation target, I'm quite okay with it. As far as the other issue is concerned, that is stated as per the laws. So right now, that hasn't happened. The Finance Minister has just announced that, but the legislation is, in my understanding, legislation will be required to shift the control of the capital flows, especially equity, to the Finance Ministry from the Reserve Bank. So, if it is within the laws, I don't see why should that be a matter of friction. You might argue there is some sort of tough battle, etc., but what is law is the law.
Sure, that is, what is the law, and the Reserve Bank will also have to abide by it. But my next question to you is on the distinction between FDI and FII. Given that in the hierarchy of overseas flows, FDI is clearly far more beneficial, particularly in terms of externalities. Do you think the government should do away with this distinction, or rather prioritize FDI rather than FII? Because clearly FDI is far, far better in terms of job creation, in terms of so many other externalities that we can get, which don't exist in the case of FII. It's longer lasting. So certainly FDI, which is what China did, they went in for FDI, they liberalized on that front first, and only later on opened to FII. Whereas we went the other way, opened up first to FII. So is it wise in a situation like that to kind of remove the distinction between both?
No, we opened both FDI and the portfolio investment simultaneously. We did not open the portfolio investment before we opened the FDI. That's just for the record. As far as whether the government should maintain a distinction, you are saying the FDI generates greater set of externalities, but there you are assuming that the sum of the two is fixed, and therefore I can somehow, given that fixed sum, I can, by maintaining the distinction and by giving some different incentives, I can shift towards FDI away from the portfolio. But that number is not fixed. So, if allowing it all freely allows more foreign investment to come, whether it is in equity or direct foreign investment, I think, that is a good thing. Personally, I think, if FDI is where you want to go, then the issue really is not so much maintaining this particular distinction, that's small potatoes. The real issue is how you change your investment regime, how friendly your investment environment is. I think that is, so whatever actually is good for domestic investment is going to be good for the foreign investment. Unless, you focus on that, just by keeping a distinction between the two and, maybe giving some favorable treatment to FDI over a portfolio, that's not going to really do it.
And how do you view the changes in the direct tax laws that we've seen, particularly as far as corporate tax is concerned, the roadmap that he's announced for reducing it to 25%, of course, simultaneously removing exemptions as well?
Right. No, I think that was overdue. We in terms of the tax rates, actually, corporate taxes, ours are one of the highest ones. And remember that, you know, with 30% tax rate, we are not collecting 30% revenue on the profits. You know, so the tax collection is a lot lower, closer to maybe 21-22%. And so obviously that indicates to a lot of the exemptions, and I'd rather have a much simpler system with much fewer exemptions and a lower rate. So I welcome that, and the finance minister actually also talked about reforming the personal income taxation system. So I also look forward to that, because there also we have this exemption Raj still. Kelkar committee report at 10 years ago argued very forcefully that the exemption Raj ought to be removed, but nothing much has happened since then. And it seems that the finance minister has actually put it back on the table. So we'll see where that reform and at what speed that reform proceeds.
Absolutely. Arvind, just one last question. How enthused are you by the announcement about the National Investment and Infrastructure Fund? Because if you remember, there was a National Investment Fund earlier, and all the disinvestment proceeds were supposed to go to that. But it never really happened, except for 1 year. It's just basically been existed only on paper. So, I mean, how hopeful can we be that this time the government means business and we will see the money being used for investment?
No, I mean, this is only one component of the overall infrastructure investment policy that the finance minister has articulated in the budget. So, and remember, he's starting with the government, you know, I think in this year maybe 5,000 crore rupees, and overall I think he announced 20,000 crore rupees. So, I mean, clearly it's not the central part of the scheme, but it is an add-on, it's an additionality to boost infrastructure investment. Now, you know, whether it would actually translate into what the intent is, etc., that we'll have to wait and see. You know, I can't second guess, you can't second guess, we just have to wait and see.
Okay, so how would you rate the budget, Arvind, on a scale of 1 to 10?
No, you know, grading my students is bad enough. So I mean, I won't give any numbers rating, but let me say, I mean, I really think that this is a fantastic budget. You know, my overall, the way I would put it is that, you know, the finance minister sort of said that it's not a big bang budget, but if you look at all the actions that have been taken in the last 9 months, plus what the budget has announced, it is a big bang set of reforms that would have happened once what has been announced is also done. I mean, labor law reforms actually, which I had lobbied for, are going on through the states. Land acquisition is already on the anvil. Some of the issues related to the salaries of the workers, you know, currently in the organized sector, a worker who gets 6,000 rupees, about 3,000 gets deducted through ESI and EPF, etc. The finance minister has actually put it on the table that they are going to reform that. That is actually going to be a big boost to organized sector employment. Then the GST. Infrastructure, all that really to me adds up big time on Make in India. I mean, to me really that is the major program where you are going to kickstart the employment for the low skilled, and I think a lot of the pieces are not coming in into place, and so I'm totally very pleased actually that with the budget.
Okay, right. Okay, Arvind, thank you so much for joining us and sharing your first thoughts with ET Now. Thank you so much.
Pleasure, Mathili.